Hi everyone, welcome to this week's Market Watch. I'm Hillary, and it's a pleasure to share with you our views on the market developments. I'm going to start with the United States. In the United States, economic reading in September came in stronger than expected. Many continue to pin hopes on Fed rate-setting committee to implement a second stimulus program. We think such programs will not happen in the near term as economic conditions have not deteriorated enough. With no catalyst in sight, we maintain our stance that growth will be slow in the United States. From a long-term perspective, we're positive of financials and energy. In the financial sector, we think they're undergoing some healthy structural changes. With respect to energy, developing countries will almost certainly continue to demand for more fuel, and once the economy starts to show sustainable growth, demand should increase. So if we look at the S&P 500, it is currently trading at a near-term support of 1,115 points and a resistance of 1,150 points. Okay, with respect to another economic powerhouse, China, property prices continue to be a concern, even though prices in 70 of China's large and medium-sized cities were unchanged in August on a month-on-month basis. Total amount of loans has soared close to 5.7 trillion year-to-date. However, with inflation pressures easing, officials might temporarily ease their concerns about whether banks exceed the annual target of 7.5 trillion. Heat has been rising once again over the renminbi recently. After weakening against the dollar in August, the renminbi has gained close to 1.7% since the start of the month. We think the Chinese will continue to face pressure from the United States to appreciate its currency in the weeks ahead. That is so because midterm elections are looming and US growth is slowing. US trade deficit is also on a widening trend. Moving ahead, we think the Chinese government will continue to try to contain property price inflation. However, the authorities have no intention of hitting the brakes on broader economic growth. So once again, if we look at the equity market as we speak, the Shanghai Composite is trading at 2,591 points. The near-term support is 2,565 points, and the interim resistance is 2,630 points.